Coffee, coffee, coffee. G'day, mate. How are ya? How's your mum? We'll start in a couple minutes, just like 2 minutes maybe. Let me enjoy my coffee, huh? I hope you had a nice weekend. Oh, I guess I missed the news wrap up. I thought there was going to be a news update. So let me get an update here. Canadian dollar, markets await U.S. tariff news Tuesday, Scotiabank.
U.S. dollar slips as markets ponder tariff risks, Scotiabank. Loonie strengthens as trade concerns prompt U.S. dollar sell-off. Euro-U.S. dollar strengthens as European leaders agrees to draw Ukraine peace plan. Singapore Purchasing Managers Index down to 50.7 in February from previous 50.9.
Brazil, S&P Global Manufacturing PMI up to 53 in February from previous 50.7. UK mortgage lending strongest. Since 2022, approvals fall slightly.
JP Morgan sees copper prices at $11,000 in Mint in 2026, 10% tariffs by late 3Q25. Hong Kong retail sales decline eases. Trump set to make investment announcement later today at 18:30 GMT, White House.
Cool, right? Yeah. All right, welcome. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders and investors. We gather here today to do technical and fundamental analysis using traders.com with an overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So Traders offers you market sentiment analysis, fundamental analysis, technical analysis, performance coaching, and then you want to use Traders Way for your execution. Because they're an ECN, they're quick, they're affordable, but the best of all is they do not trade against you. That's why you want an ECN. So this is the complete package. This is it. Complete package, everything you need in one place. Well, you're like, well, all of that is good, but I'd also like some funding. I'd like to use all of this with a prop firm. Oh, well, maybe I can do that better for you. So maybe I got some things up my sleeve. I don't know. Can't really say, but maybe you should stick close. Be a part of the community and be the first to find out. Bitcoin, 93 up. Okay. On Friday or Saturday, we tickled 80,000. And then around 3 or 4 o'clock in the afternoon, Trump posted discussions about the crypto reserve, specifically Cardano, Solana, what else? Ripple. And then he tweeted again about Ethereum and Bitcoin all going into this fund. And so we were at 80,000, and a few minutes later we were at 95,000. So I look at this as, we dropped from 95 to 92, and now we're trying to work our way back up. So we'll see. Maybe some people are just waking up, finding out now. I'm like, really? Okay. But anyway, so that's what's going on there. Dollars weak, money moving on to the stock market, gold catching a little bit of bid, but this is down, which is good, and this is up, which is good, and this is up, probably good, and then this is up, which is a sign of good. We have a plan already established for this. And if you're part of our fundamentals group, I don't know. We've discussed this till we're blue in our face, so we know precisely what our intent is. And then look at this, yields down, which is also good. Interesting. So I asked you if you're risk on or risk off. Hopefully you've taken an opportunity to answer the poll. It is anonymous. Okay, a little bit of risk on. Typically, you would look for Aussie, Euro, CAD, Kiwi, Gold, S&P 500, and then sell these. So I'm sure you've already gone through all of this because, we have, and I have. But is this true right now? Yep. 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 And I would also add pound to this list. I just wanted to show some different variations, right? Is Aussie true right now? No, probably not. Is Kiwi true right now? Probably not. And that has to do with a different issue. The nasty gram from China, or the recession from China, or tomorrow's tariffs on China. So that is different. That's risk off for those particular currencies because of that particular confluence of trade policy. The United States tariffs China. China's economy slows down. China doesn't need stuff from Australia and New Zealand because their economy is slowing down because they've been tariffed. And so Aussie and Kiwi drop. Oh, okay. So good. That's what global macro is all about. Gold is interesting, right? So is it tradable right now? Well, it's trending down. So even though it's got a bid today, and even though it's fundamentally bullish, I'd pass if I were me. Okay. What about USD yen? It's usually up this time of year. Okay, that's great. But right now it's very down. So do I buy this? No. Okay, what about Aussie, CAD, and Kiwi bearishness? Yeah, usually is. And okay, usually is. The technical trend is down, so that's good. Now, what if it's up? What if it's up today? This is long-term fundamentals, not technicals. Technicals you'd have to find here. Well, it might be up today, so therefore you look for resistance, and then you look for technical patterns to confirm the resistance is being respected and that you have continuation to the downside. That's how you think about it if you are a bear. How do you know if you're a bear? How do you, I don't know, you'll have to figure it out. How do you know if you're a bear? I don't know. You'll have to really figure it out. Pound Swissy, very bullish. Based on interest rate differentials, jobs, inflation, GDP, the technical trend, oh, not seasonality, retail positioning, and institutional positioning. We got a score of 12. Is that good? I don't know. Cool. That's pound Aussie. I want pound Swissy. Pound Kiwi. Everything pound is winning right here. Notice those are the three things I'm focused on because I've been bearish on Aussie, bearish on CAD, and bearish on Kiwi. So I don't want to disturb that. Those are all good setups. So let me go to cool. All right, so let's go to a smaller time frame. And we had a trap and break policy on this sucker. And it did break. And we went up and we hit our weekly target. Cool. Okay. I'm about to give it away, give it away, give it away, y'all. You ready? I'm going to predict the future. Actually, I have no idea what the future right? I don't know what the future is, but I know what my behavior is. And I'm going to expect some sort of pullback. And if so, I'm going to look at this level and this level. I'm also going to look at the weekly pivots and the monthly pivots. So monthly central, okay, seems to be our bottom. So that means my projection is going to be based on the support. It's not me making a decision. It's just technical analysis. Is the technical analysis right? I don't know. But let me make this semi-permanent. Okay. Let's say we go here. That gets us to the weekly target early. That means we're going to have a pretty significant pullback. Maybe as far as this. But I'll leave it about here. And then we go back from the weekly move back to the monthly move, and we get something like that. Oh, but remember, you want to know to look for that here. Because now you're doing comparative analysis of both macro economies. And you've been a bull from around Valentine's Day. Okay, right around there. I'll do it like this. Okay. You've been fundamentally bullish since this moment. You are not here. This is all dead to you. Notice that we're in a range too, right? And so fundamentally, right around our break of the range, you get a pullback. Well, that's how you trade a trap and break. And I've trained you guys a bajillion times on how to do that. Now the rest of the world figures out. So now we go from resistance becoming support. And now we got a breakout, which is good. So now guess what I'm doing? I'm predicting the future using technical analysis. So no, I'm not predicting the future. But what technical analysis would show you is there'll probably be an up, there'll probably be a down, and then we'll follow probably an up. Yeah, boy! How do you guys feel about that? Do you like the fact I can go back in time and look at you're a bear, 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 flat, 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 you're a bear, flat, flat, pa-chow! Bullish, 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 even on the dip. Bullish, 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 and all of a sudden we're very bullish. Ripper! Nor! Yeah. Cool. Neat, right? Good to know. Good to know. Good to know. Yeah. Bad to not know. So we were looking at this earlier. Gold, you might be bullish on. But using statistical analysis of the price time data on the daily chart, you'd be guessing that you're a bull. It's a little too early based on that. Now, you can do proper technical analysis. That's not technical analysis. That's statistical analysis. The slope of the mean has a negative integer. Then you standardize the variance and you do linear projections. It's statistics. So now you might open up your charts and then drop your technical indicators and see something completely different. Oh, but Wayne, did you see the MACD divergence that predicts up? Well, that's not what that is doing. Oh, but did you see the pivot point it kicked off of? That's not what that is doing. Wayne, did you see the moving average crossover? That's not what that is doing. That's your job. Cool. But right now, down. Cool. Right on. Feels like we're going to have an up and a fizzle out to me. What do you think? Touch 3,000 one more time and then fizzle? What do you think, huh? I think it'd be cool if oil went up one more time and then collapsed and took gold with it. So inflation drops precipitously. And, right, the Fed's able to cut. Oh, now maybe it brings the stock market down with it. As long as it's not too much, I'm okay with that. I think a controlled burn is necessary from time to time. Cool, right? I know. Oil still has, it tried to bounce last week, but it still has a negative slope to the mean. We're still projecting as low as 67. And things got not better, but a little worse last week. Why? Because of this email I got. Oil. 3.76% more bullish. Bearish, I should say. More bearish. Net short. When you add up all the bulls and all the bears, it right? Week over week was more bearish than bullish. What? And you see the number here? Oh, shut the back door. What? Yeah, see? I was emailed this number. So I didn't even need to log in. I knew on Friday at 4:58 p.m., I got this email to me, so I was informed instantly. Don't have to log in, don't have to go to this page, don't have to scroll and read it and ponder it. I got it on my phone. Pa-ching. Oh, cool. Because I'm a bear for now, waiting to become a bull. Why would I want to become a bull if it's down? Okay. What do you think about this? Yeah. So we just started this month. Okay, we just started this month. Should I be ready for a change in direction? I don't know. You do you. Is that A-Team that I'm humming? Yeah, I guess so. So I'm not going to go through the COT report because I already did. So this is still doing, it's still thinks up. Even though yields have come down from about 4.6 down to 4.5 and then 4.4 and 4.3. Now we're at 4.25. Looking at the data set, they're still up left in here. Yields up, which means it's still statistically bearish. Yeah. Here's that move we had over the weekend. These are the closing prices. I know we came down and we tickled 80,000 intraday. And then, boom, started a new day at 94. It was actually a little higher than that. Whoa, whoa, whoa. But based on what it was doing, it's still statistically bearish. Okay. March is typically a pretty decent month, though. So seasonality, we got a strong 2. So we have bid today on euro dollar, but statistically still bearish. Pound is a better trade, of course. And statistically, it's not just sort of biased, but statistically it's better. The slope is positive where euro dollar is still negative, or at least flat. Okay, what about the yen pairs? Okay, statistically this is still down. So if you're having a monster up day, well then it's still statistically might just be a pullback. Okay, roll reversal here maybe at 190. I don't know where are we now? I don't know. Let's just do that now. Okay. Oh, look at that, dude. Look at that. We nailed it. Oh my God. Crushed it. All right. We want Beastie up. Okay. Beastie up. And we hit our weekly target already. So let's go to a smaller time frame. If you're a bull, okay, and you're doing a weekly swing trade, okay, the buy zone is here. You're like, Wayne, I don't see it. Well, I wasn't necessarily a bull on Friday, were you? Well, if you were, you'd have your pivots pointed up, and that's pretty standard, straightforward. There it is. That's what you do. All right. Cool. So the question is, if you missed it, now what are you going to do? Because we're kind of already on target. So you have a choice if you're a bull. I don't think you should buy high after it moved. That's not trade planning. That's trade reacting. So I would look at the roll reversal, and then guess what? I would turn my pivots bullish. Guess where the next buy zone is? Right there. And so over the next 24 hours, it might be in the next 8 hours, but in the next 24 hours, this is what your trade plan would be. Cool. Now, what if you're a bear? And, well, in this time frame, you wouldn't want to sell a higher high. That'd be terrible. But you do want to start looking at higher time frames. What do they mean? Where are we in the processes? Okay. Technically on the weekly chart, this is still bullish and trying to play off of a double bottom. Is that what you're doing? Look at this. I even have it marked, and that's our absolute low right now. So are you a bull now? Well, that's what you need to decide, right? Yeah, that's your alpha. Okay, what about daily? Okay, I suspect where we are is going to be resistance or R, which is here. Where we are, or if we go to R, resistance is above us. Where would a bear sell? Well, if it's going to be an inside month, it's this. Is it going to let me draw it? Yeah. All right. Oh, what is that? Oh, there's a new feature. Disappearing ink. Medium, very long. R1, and it's going to disappear slowly versus this R1 versus this R. Oh, wow. All right, cool. So we can go like this. Here, or here to here. Oh, what a cool new toy Wayne's got. Yeah, and I'll do it again. So if we get here, then it comes back toward the central, and then we work our way up to the next target next week. And then the ultimate target is here, and I call that an Arctic turtle. So if you're going to go here, you might as well go here and then collapse. So I see that. Up, down, up, out. That's just technical analysis. That's not my opinion. Cool. Well, what if it goes higher first? Oh, well, that changes things. Why? The technical analysis says something different. So we go up, and then we go down, and then we stay in this range for a while between R1 and S1 below us. But I don't think S1 gets into play. So even then, we kind of end up maybe turning the corner. I'm going to be interested in that in October or September, let's say. Let's talk about it the third week of September. Cool. What a neat new toy. I'm so happy. Good job, Richard. Yeah, planned it all out. That's good. I like you planning in advance. So let's take a look from a different point of view. Maybe you would never sell pound yen. Yeah, that's a better attitude. Maybe you're like, if I was going to buy a yen pair, it'd be pound yen under current market conditions. But if I were to sell something, CAD or Aussie or Kiwi would be selling these pairs. So you can see I've already drawn it all up. It should make logical sense to you. I pointed out the lower low. I pointed out the likely lower high. And then based on that likely lower high, I calculated the likely lower low. And look, I'd say that's pretty good. That's quite precise. Cool. So maybe you're like, you only sell CAD yen and you only buy pound yen and you wait for the right market conditions. Yeah, I think that would be the right way to handle it. So anyways, we did enough fundamentals. You can do some technicals, but first let's do some market sentiment, because what I haven't checked today
Dollar climbs amidst trade.
is the sentiment radar. And for Bitcoin, oh, it doesn't have Bitcoin, huh? Oh, really? No Bitcoin? Huh. Wonder if I can get Bitcoin. La 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 la. Yeah, that's too bad. Because I think things would have changed quite a bit yesterday. Look at this, Aussie US dollar, negative score, and it's down right now. Kiwi dollar, negative score, and it's down right now. Pound yen, positive score, it's up right now. Also, market sentiment shows that pound is stronger than euro, and pound is stronger than euro, and euro is strong. What's going on here? Negative score, but this is up today. Yeah, so we'll see if this starts changing. Pig Dog, Oscar Mike, coming up. It's euro dollar's got room to run, pound dollar's got room to run, and Kiwi. I guess when the other ones run out, when pound to euro run out on the upside and come back around, that would be the time to sell Kiwi dollar. That kind of stuff. That makes sense. Gold. Look at that, kicking off our implied 4-hour low. Nice little roll reversal, little upsy-doozy, and then fizzle out in the next few hours. Okay. So notice here, it's suggesting maybe 3-4 hours ago, you should have been preparing to trade this. And you're like, wait, what? You mean in here? Uh-huh. So we have 1 more hour power, and then we're going to lose volume and volatility. On the gold. On the gold. Pound Swissy's a great trade today. It's Oscar Mike. So you might have missed it. Okay, great. Well, what if it comes back to this level between now and tomorrow? What are you going to do with your life? I want to rock. Yeah. I want to rock. Oh, it keeps disappearing. Like, what the heck? Sorry, I don't know if I like that disappearing ink or not. But anyways, is this your trade plan for the next 24 hours? Wait, you don't have a trade plan for the next 24 hours? How are you going to do? Oh my God. What do you mean? That's my Jerry Seinfeld, by the way. Yeah. So let's go. Let's just play around with that. I love the Pissy, by the way. It's such a great pair to trade. It's one of my favorites. There are periods when it just doesn't work. Then there are periods when it's a giver. All right, cool. All right, so what do you want to do with this? Okay, on a 15-minute chart, you could buy it off the moving average. Okay, let's try to draw this. 3 ways to trade by Wayne McDonald. 1, role reversal. 1, okay, RR. 2, PP, pivot points. Same thing you say. Really? And number 3, moving nav. Anywhere between this, and not where they are now, but where they are in the future. So let me try to thread this needle for you and say, if you were a bull and you believe this is going to continue, is it going to continue? Nobody knows the future. So you better figure out what you want to do. Okay, what does this green zone mean, by the way? This green zone that I have highlighted means that's the target. Oh, yeah, well, look at that. Gorgeous, right? So what's the new trade? Is that what you intend to do? Oops. Is that what you intend to do? What do you intend to do the next 12 to 24 hours? You don't know? That's the problem. Okay, maybe go further out. Okay, maybe go further out. Oh, look, I've already done this. But you do you. What are you going to do? I want to trade. Yeah. Okay. Bullish buying zone. Oh, couldn't be any clearer. Okay. What if that doesn't work? Then you're going to lose some money. Are you going to lose a lot of money? No. Why? Because you're disciplined on your risk management. It's impossible for you to lose a lot of money because A, you never bet big so that you can try to make a lot of money quickly. And B, because you're disciplined, even if you took a loss, it's not going to be a big loss. You're not going to let it drop and drop and drop and drop and drop. That's for losers. You're definitely not going to dollar cost average. It'll drop and drop and you buy more and drop and you buy more and you drop and drop. That's also for losers. You're not a loser. So if your trade plan fails, you're going to take a loss and you just move on to the next trade plan. Cool. And because you don't put yourself in situations to make a lot of money quickly, it's impossible for you to lose a lot of money quickly. Because the lot size relative to your account size is small. You don't gamble. Gambling's for losers. Okay, you're a professional. Cool. That's why I respect you. Cool. So what's your intent over the next 24 hours? We call that day trading, by the way. It's a much different question than, I think, how a lot of people day trade. They day trade moving averages, for example. They day trade oscillators. I would day trade differently. What do you intend to do the next 24 hours and why? Are you going to buy pound Swissy? then great. Now you're trying to figure it out. But notice what we already have on our chart. This is already a buy, and this was the target. Jiminy Cricket. I know. So now do it again. What's tomorrow's target? Oh, you don't know? That's the problem. You don't know what you want to do. You don't know why you want to do it. And you don't know where it's probably going to go. And by probably, I mean probability. Probability based on if your fundamental and market sentiment analysis is correct and you are right that the next 24 hours is up. You need to know, well, how up and where would you buy? All right, so let me show you tomorrow. If your analysis is correct and your bias is correct and the market sentiment agrees with you, okay, that's the buy zone and this is the target for tomorrow. Today's already done. It's done. Where were you? Well, Wayne, I didn't know I was going to do that. Yeah, okay, but now what do you think tomorrow is going to be about? That's what I want you to try to do, is say, I predict this will continue up. Why? You tell me why. You tell me why. Okay, great. So if you're correct based on technical analysis, and you can do all kinds of technical analysis, like I showed you, you can use moving averages, you can use pivot points, you can use price action. But you should have this planned out, or you just simply don't have a plan. Of course, you might be a bear and you have a quite different plan. I don't care about that because I don't know if I'm right. You don't know if you're right. But we should have very powerful rationale over why we think pound Swissy will go up or down. Okay. Have I been a bear on the Swiss franc? Just the Swiss franc. Have I been on a bear on the Swiss franc for like 6 months? What do you guys think? Just the last 6 months. I'm just grabbing at a number. It could have been longer than that. Yeah. So that's that. What about the pound? Well, I'm not necessarily a bull on the pound. Let's not get carried away. But there is no doubt I'm passionate about the Swiss franc being bearish. And you can get into an argument, a street fight with me over how bearish I am on Swiss franc. There's nothing you can do or say to make me want to buy it. Not right now, and certainly not over the last 6 months. So I have conviction. I have a strong, strong opinion about the Swiss franc. And then today, okay, when we go to our indices, which you probably look at 5 or 6 times a day, right? Yeah, pound is strong. Oh, Swissy's weak. Good. Pound Swissy up. Euro strong. Swissy's weak. Euro Swissy up. CAD is down. Swissy's weak. Don't trade it. Swissy yen, don't trade. Swissy USD, don't trade. Kiwi Swissy, don't trade. Aussie Swissy, don't trade. So I can look at this and in less than 3 seconds go pound Swissy long, Euro Swissy long, pass, 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 done. And then I can have some pretty cool tools to help set all that up. And so using something completely different now, just using implied volatility, okay, somewhere around here, I want to get long in the next 24 hours. Now, over time, these prices are going to change. And it's only looking at pound Swissy, what it does Mondays, Tuesdays, Wednesdays, Thursdays, and times of day. So if I was going to be a bull, I might be able to predict when I'll get to a buy price. Is it going to be this afternoon, or is it going to be in Asia? Okay? See, around midnight, which is 2.5 hours after the London Open. Sorry, not London Open, Shanghai Open. It's 4 hours after the Tokyo Open. Pound Swissy tends to start moving. Now, this is because it's 3 hours before London. So Russia opens, and then Frankfurt opens, and then Zurich opens, and then London opens, and we peak right at the London Open. So you want to front run London Open. Then it fizzles out while we wait for the Americans. And the Americans start putting in their trades around 6 o'clock in the morning, which is also London lunch. So maybe it's the London boys' second trade of the day. And it's the Wall Streeters' first trade of the day. Great. So front run, front run. Okay. Cool. And so this is now what we actually know to be true. So what actually happened? Remember, we just mapped out Mondays. So this is market open on Sundays. Ooh, ooh, oh! Okay, so, you were supposed to be around 5 or 6 o'clock in the morning front running Pound Swissy. Oh, you mean here? Okay. Midnight we topped out. So Asia didn't push it higher. Okay. And then the London boys picked it up. They bought it low at the bottom of the range. Cool. So now what? We've had this up, and now what's likely? Over the next couple hours, fizzle, 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 fizzle. So what are you going to do tonight? Fizzle, 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 fizzle. Asia, London. Tomorrow, I'll trade you tomorrow. Oh my gosh, is this amazing? This is amazing levels of detail. That's just Mondays, y'all. And that's just Pound Swissy. See, I think Aussie Swissy or Aussie Yen would move sooner than Pound Swissy. These are European currencies. Asian currencies are going to move better in Asia, one might think. Is it true? Oh, I don't know. But you have the data to find out if it is. Aussie Yen. Okay. It does all right. It does all right in Asia. Then we wait to front run London, and then off we go. Okay. So up into London, and then London opens at 3, down, and then up London lunch. So what does this mean? You front run the London Open, then you front run the New York Open, and then your trade is dead until the New York close. And then you might actually have a little opportunity to front run the next day, which I call the Asia fade. Vensu, you could do that. Vensu's like, well, if you decided to be a bull, couldn't you just like buy this? Right, put an order there? Yeah, you could. I'm not going to tell you what to do or how to do it. You can do that. And with this information, you'd put the stop lower than this. Let me do that in black so it's easier to see. That's what this says, because it says statistically in the past, it's very rare for Aussie yen to collapse lower than this daily low. It would be unusual. Now, could it happen? Yeah. But that'd be very unusual. If you got the direction correctly, that would be unusual. If you got the direction wrong, that would be normal. So if you're right being a bull, it's just not going to do this. Not likely. It could, but it's not what has occurred in the past. Remember, this is implied volatility. So it most likely you would get something like this over the next 24 hours if you got your bullishness correct. Implied volatility doesn't know anything about direction. But it'll help you with time of day. If you were a bull, okay, actually let me take this back because this is a continuation here, right? So this is Asia Open. That's a good time to get long or short Aussie yen until the London Open, in which there's a fade. And then around London lunch, you front run New York. And once that opens, it fades to the close. And then the last trade of the day for the New Yorkers is again Asia. So they're front running Asia. There's your front run of Asia. And then here's the Asia Open. So these trades are going in, 4 or 5 o'clock at night. And these are happening, 8, 9, 10 o'clock at night. Cool. It's not even fair for the amateurs, is it? Yeah, well, you know what? Life isn't fair. How did I do today? Was that all right? I think I'm spent. I'm right? I'm emotionally burnt out. Was that good? All right, let me show you one more thing, and then we'll get out of here for the open. Yeah, not bad. Go to YouTube, youtube.com, YouTube at TRADARS, and I popped the Squawk box on a live virtual server, and it should be able to run indefinitely right now. I find that there's a slight choppiness to it because I don't believe there's a GPU on the server, and I didn't think of that. It's got plenty of RAM. The internet speed's fast, but this process takes a lot. It's taken up like 95% of the CPU because there's no GPU. Oh, dang it. I didn't know that. I didn't know they made servers without GPUs. But anyways. But that cost me now an extra 50 or 60 bucks a month on top of all my other costs. But this will now run indefinitely for you without me being involved. And it should be 24 hours a day, 7 days a week. So maybe once a month I'll reboot it or something. But if you could, please use this. It does cost me money. And it's a very good thing. So it will read the news to you as the headlines come out. Many services cost hundreds of dollars. This one is free. The only delay on this right now just happens to be the YouTube latency, so I haven't purposely delayed it. Now, members of TRADARS have their own, and because they're not logging into YouTube to watch it, they're logging into TRADARS to watch it. There is zero latency, and it's ridiculously fast. And now they are able to communicate with each other. And I'll show you that. US dollar dives lower with European leaders forming front on Ukraine. US stocks may extend last Friday's late-day surge.
Australian dollar US dollar jumps to near 0.6230 as U.S.
Okay, and as you can see in 15 minutes, we have Canadian PMI, and in 30 minutes, we have American PMI. And of course, members of TRADARS will be able to open this up and do their analysis, and it blinks and it flashes and all that kind of stuff, which is nice. And YouTubers, well, unfortunately, you can't click a YouTube video, but it is what it is, and the price is right. I'm just begging you to please use it, because otherwise I'm burning cash for no particular reason. So help me out. Use it. Benefit from it. And so I'll pop that over here. March seasonals. The sun shines a bit brighter. US dollar dives lower with European leaders forming front on Ukraine. US stocks may extend last Friday's late-day surge.
Australian dollar US dollar jumps to near 0.6230 as US dollar tumbles. Upside remains capped. Navarro continues to point to drugs as the reason for tariffs on Canada.
Bay Street likely to open on firm note.
Dollar climbs amidst trade and geopolitical jitters. Oil prices rise on upbeat Chinese data. Russia-Ukraine, tariff risks in focus. It's tough to imagine some of those cryptos will ever make it into a strategic reserve. UK manufacturing downturn deepens February.
Cool, so that's that. And now you can see it's actually reading the news now. And it's about 20, maybe 30 seconds delayed. Wait, is it not playing the sound? It's not playing the voices? I'll double check that. It's not playing the voices, huh? I'll have to log into the server because I don't hear it, and it seems to be streaming fine over here. Yeah. Oh. Yeah, there's no sound. Interesting. All right, well, I'll go fix that right now. But please be over there. Let me know. I need to log into the server. If you can visit this page and let me know when the sound is coming through on YouTube, I'd appreciate that. I have to yell and scream at something or someone or on the server side. I'll see you over there. Thank you. Hope you have a wonderful day.